How to understand and intelligently manage assets and liabilities for a secure future. Welcome to this transformative video. Did you know that your daily money actions can either build a secure future or lead to financial chaos? Understanding assets and liabilities is your golden key to unlocking a life of stability, control, and abundance. Assets are what you own, your financial pillars, like cash, property, or investments. Liabilities, on the other hand, represent debts, what you owe. When managed intelligently, these two components can guide you toward a secure financial future. Let's dive into strategies to take charge of them like a pro. The first step: know where you stand financially. Create a personal balance sheet, a simple table listing your assets on one side and liabilities on the other. This will instantly reveal your net worth. Is it positive, or do debts overshadow your assets? Don't just stop there. Regularly update this snapshot. Your financial health evolves, and so should your understanding of it. This clarity lets you pinpoint areas for improvement and celebrate financial wins. Your assets are wealth-building tools waiting to work for you. Start by diversifying. Invest in various asset classes like stocks, bonds, and real estate. Diversification spreads risks and maximizes opportunities for growth. Ever heard of compound interest? It's your best friend. Reinvest earnings from your investments to make your money multiply over time. Remember to maintain liquidity so you can access funds when emergencies strike. Liabilities might feel overwhelming, but they're manageable with a smart approach. Prioritize debts based on their interest rates. Knock off high-interest liabilities first to save money over time. Consolidate loans for streamlined repayments and easier tracking. Create disciplined spending habits to avoid unnecessary debts. The key is intentionality. Spend wisely on needs, save consistently for goals, and splurge on rewards without risking financial strain. A secure financial future won't happen by chance. Set clear, time-bound goals for what you want to achieve: buying a home, retiring early, or starting a business. Align your assets and liabilities with these milestones. Don't forget the power of emergency funds. Reserve at least 3 to 6 months of expenses in liquid savings so you're prepared for the unexpected. Additionally, smart tax planning can help you keep more of what you earn. Life is unpredictable, but financial risks don't have to derail you. Invest in insurance to cover liabilities like health or home damages. Insurance reduces vulnerability in the face of life's uncertainties. Stay alert to economic trends as they impact asset values and loan affordability. Keep your financial strategy flexible to accommodate market changes without panic. Managing finances manually feels overwhelming, but fret not. Utilize apps and software to track spending, budget better, and automate savings. Technology simplifies the complex, giving you actionable insights at your fingertips. Set up recurring debt payments and automate small investments. It takes the pressure off while keeping your financial goals on track. Consistency beats perfection when growing your wealth. Invest in your financial literacy. Commit to learning fundamental and advanced concepts about money, investing, and budgeting. Read books, take courses, or watch content like this for inspiration. If you feel stuck, seek professional advice. Experts can offer tailored solutions to steer you in the right direction. Never hesitate to ask for help. You're building a future of financial independence. Financial stability is not a one-and-done effort, it's a lifelong process. Regularly revisit and update your balance sheet to track progress. Celebrate small wins like paying off a loan or hitting a savings milestone. It keeps you motivated. Adjust your strategies as your circumstances or goals evolve. Flexibility ensures your financial plan stays relevant, no matter what life throws your way. Your financial freedom starts now. Reflect on your assets and liabilities, take small but decisive steps, and reclaim control over your money. Share this video with someone who needs a hand in their financial journey. Together, let's build a world of stability and abundance. Hit subscribe for more empowering insights and start shaping the future you deserve. Make today the day you take ownership of your financial success. Effective Asset and Liability Management (ALM). Asset and Liability Management (ALM) is a strategic process aimed at managing financial risks that arise due to mismatches between a company's assets and liabilities. It is widely used by financial institutions, such as banks, insurance companies, and investment firms, to maintain liquidity, profitability, and financial stability. Here's how to ensure effective ALM. 1. Key principles for effective ALM: risk assessment and monitoring. Analyze and monitor risks such as interest rate risks, liquidity risks, and credit risks that could impact asset-liability balances. Matching strategies: align the duration, currency, and cash flows of assets and liabilities to minimize exposure to market fluctuations. Diversification: ensure a well-diversified portfolio to reduce dependency on specific assets or liabilities. Dynamic rebalancing: continuously adjust the portfolio to account for market conditions and strategic goals. 2. Tools and techniques: gap analysis. Identify mismatches between asset and liability cash flows over different time horizons. Stress testing: simulate adverse market conditions to assess the resilience of the asset-liability framework. Duration analysis: match the durations of assets and liabilities to minimize interest rate sensitivity. 3. Benefits of effective ALM. Liquidity management ensures the availability of funds to meet obligations. Profitability optimization balances risk and return to maximize profitability. Regulatory compliance helps meet capital adequacy and liquidity requirements. By adopting a proactive approach, businesses can mitigate risks, stabilize financial performance, and achieve long-term goals. Effective Asset and Liability Management. Effective Asset and Liability Management (ALM) is a strategic process used to balance assets and liabilities while minimizing financial risks such as interest rate, liquidity, and market risks. It ensures that cash flows, durations, and currencies of assets align with liabilities, promoting financial stability. Key techniques include gap analysis, duration matching, and stress testing to identify and address potential mismatches. Benefits of ALM include improved liquidity management, optimized profitability, and adherence to regulatory requirements. By continuously monitoring and adjusting portfolios, businesses can mitigate risks and achieve long-term financial sustainability. Subscribe, share, and like for more informative videos. Thanks for watching the video, and don't forget to subscribe to our channel for more watching.